Welcome back to Coffee and Cocktails. On this channel, I like to talk about budgeting, personal finance, planning, and productivity. I'm working to pay off debt, invest wisely for my future, and put myself in a better financial position. If that sounds like something you'd like, stay tuned. Hi everyone, how are you guys doing today? I am sitting here drinking it's a honey lavender latte that I got from a local coffee shop, and it's actually pretty good. It's very mild and not very strong, but it's really good. And I figured I needed some caffeine because today I'm going to do my Q1 overview. And so I'm going to go through my income, expenses, savings, everything for Q1. And so for this, I'm using my annual dashboard, which you can see here, and it lays out every single category month by month. And then at the bottom, there's also a quarterly review. And so let's get right into it. So the first section here is income summary. This is all income that I received during the first quarter. And so the total for these three actually totaled $21,677. The amount here does show differently because it is April when I'm currently filming this, and so this has some other numbers in these totals here, so those are not accurate. And I've also budgeted for May, so that's also included. But for what I actually had budgeted for the first quarter, it was $21,677. I received about $22, so a little bit more than expected, so that was nice. So for each of them, they were all positive variances because they were all more than expected. So that was great. And then up here I have a little chart that goes into the categories of it. So this actually does income versus spend versus savings. And so the gray one here is the income. And so as you can see in March, it kind of peaked here. And like I said, April and May haven't been completed yet because it's currently April when I'm filming this. But for the first quarter, March was the high point for income. I also have an income tracker. And so this has a little bit more detail. So my income goal for the year is $200,000, and that's gross. And that's from all income sources. So that's not only my standard corporate job, that's just everything combined. My goal is $200,000 gross. Currently, so far as of Q1, the total income gross was $30,575, which means I'm 15.29% towards that goal. So then we'll go down here. So this is where it's laid out in a little bit more detail. So going through the income for the first quarter, my main income sources is this first category. And so the orange is the total of these categories here below. And so obviously the majority of it came from my normal corporate job. So my gross income was $26,679 from my corporate job. I also had some credit card rewards totaling $26. I had interest. I have a high yield savings account with Marcus by Goldman Sachs. I think pretty much every month in Q1 I had about $2,000 in there, and so this was the amount of interest I earned on that. So almost $25. This is my employer retirement contribution, which I count as income because it is truly income. So this is for my 401k, anything that my employer contributes. So I do get a 6% match into my 401k. And so that is this amount here. And so for the quarter, that's $1,600.74. The next line item here is Rakuten. Rakuten is a cashback website, and they pay you out every quarter. And so if you purchase something from any website, well, it's pretty much any website, if you go through Rakuten first, you will get a certain percent of cash back. And they do also have options for if you do in-store spending as well. Most of mine comes from online spending though. And so I got back $54.57 in cash back. And then also I have an Etsy shop. I just recently reopened it. So definitely check it out if you'd like to. The link is down below. But I did receive $30 from my Etsy shop in March. Retirement account dividends. This one was actually really interesting because in March, I received quite a bit of dividends on my 401k. So I guess we'll start at the top. My traditional IRA, I didn't have any dividends. My Roth IRA, I got 34 cents in dividends. Obviously it increased, like the market increased during this time. So my Roth IRA balance went up, but the actual dividends was 34 cents. My traditional 401k and my Roth 401k is where the majority of these dividends came from. So you can see, January and February, it wasn't a lot, $8, $9, and then, $1 or so into the Roth. But then in March, my traditional 401k, I earned $632 in dividends. And in my Roth 401k, $118. So just in March alone, I got $751 of dividends in my retirement accounts, which was fabulous. And then going into my other account dividends, I do have a couple brokerage accounts, which are non-retirement accounts. And so I received dividends on these. However, it's not a lot. As you can see here, total for these was only $6.52 for the quarter. I have Robinhood, in which I have single stocks. So I got $5.66 of dividends there. And then I have M1 Finance. I have some ETFs in M1, and I got 86 cents of dividends there. So not a lot, but every little bit helps. Real estate, I don't own any real estate, so there's nothing there. I got my tax refund from both federal and state in March, so that was $1,100 back in my pocket, which was nice. Recycling, $8.77. I live in California, where there's a deposit on, bottles, cans, glass, anything like that. And so then you have to take your recycling in to turn it in for it to be recycled, but then you get that deposit back. And so there was $8.77 in January for that. Miscellaneous. Total for the quarter was $244.43. So overall, in Q1, I made that $30,575 of total income. And you can see here again, just like the other graph, March is where it peaked. So that is pretty cool. Income allocation, majority is from those main income sources because that is where my corporate job goes to. And then retirement account dividends was, let's see here, the blue. Investment account dividends doesn't even show up because it's such a small amount. And then other, which was the recycling and the tax refund. So that is the income for Q1. And so then we will go back to the annual dashboard and go into the bill summary. Okay, so going into the bills, what I budgeted and what the actual was pretty close, pretty much all 3 months. The biggest difference was February, where the variance was almost $50 from what I budgeted. I'm trying to remember why that was. I think there was a bill that I ended up not having to pay, or it was way less than I expected. But overall, they were pretty close. So January, about $3,400. February, just around $3,000. And March, also just around $3,000 for bills. And so you can see up here on the graph, January is a little higher. I don't remember why that was. I could look back at my January budget and see why my bills were so much. Oh, because I had to pay auto insurance in January. So that's why that one was much more than the other months. But really not much variance there, so that's fine. Seems like my bills kind of average around $3,000 a month, at least at the current time for Q1. And so the next, going into expenses. Looking at this, my expenses vary greatly month to month. So what I include in this category of expenses is things like groceries, eating out, gas for my car, like getting my nails done, things for my house, stuff like that. And so that varies a lot. And so these are mostly my variable expenses. So January was pretty low. I had budgeted $295. I only spent $102. A lot of this was because I was gone on a work trip for, I think, 2 weeks of January. Might have been 3 weeks. I think it was 2 weeks total in January. Or was it 3 weeks? Yeah, it was 2 weeks. I went to Reno, Nevada in January. So I was gone for 2 weeks, so I didn't spend a lot on groceries or just like kind of any random spending, just because I wasn't here. And so that really helped the budget. And so even though I had budgeted a fairly low number, I spent even less. So the variance was $192, so that was great. February was a little different. I had a very spendy month in February. I budgeted about $650. I ended up spending $931, so $281 more than I expected. And it's funny because February is a short month, and I also had a work trip in February. I think I went to Chicago in February. What else? Oh, I did go to a winery, so I spent more money on that. Overall, it was just a very spendy month. Yeah, fun money. I think a lot of it was for the winery. I know my groceries was more because of the winery, and my fun money was more because I ended up buying a expensive bottle of wine that I was not expecting to do. Yeah. Oh, and I paid for a few other, like I bought a stock advisor tool and some budgeting stuff, I think was in the stationery section. So anyways, regardless, I spent more in February than expected, but that's fine. So I was over $281 over budget. March, I budgeted $1,067 for expenses in March. I ended up spending $956.72, so I did spend less in March overall from what I had budgeted, but it is still quite a high number. I mean, $956 is still pretty high, but I'm trying to think, March, even though March just got over, it's so hard for me to remember what I spent. Let's go to expenses. Oh yeah, I bought a desk. So that was the biggest purchase in March, and that's why it's really so big, was because I bought a desk and I think it was like $440 or something like that. And so that's the majority of this. But I'm loving it. It's a stand-up desk and it's nice and long. And so I've got plenty of space and I love it. So I'm totally happy with that purchase. And I used money from my tax return to get that. So overall, not too bad. And you can see up here, obviously, February and March are fairly high up here. And then January is really low. And then again, April and May, haven't finished April yet. So that is not there yet. So then going over into savings and sinking funds. Okay, so let's see. January, I budgeted $420. I saved $520, which is great, $100 more than expected. February, I budgeted $20, which is that $20 I put every month towards my auto maintenance fund. I ended up putting in $95, so $75 over the budget. March, I budgeted $986. I ended up putting just over $1,000 into my savings and sinking funds. And I think this was because I had a vacation in April. And so I needed to save up money in my vacation sinking fund so that I could use it in April. And so that is great. So overall, more going into my savings and sinking funds than what I had originally planned. In quarter one, I put in $1,677.97 into my savings and sinking funds. And so you can see here again, March is the highest. February was very low, which is mostly because February was so spendy over in the expenses, and I spent more than I had expected. I wasn't able to put as much into savings and sinking funds as I had originally wanted to. I also have a savings dashboard. So I like to look at this also. This is where I break out all of my sinking funds, and I have a goal for each of them, what the starting balance was at the beginning of the year, how much I've saved this year, and then the current balance, and then how much has gone in each month. So you can see majority of the money went into work trips. So I put $660.76 into work trips. Most of that was January because I ended up spending money on that trip in January. In March, so January I went to Reno. February I was in Chicago. And then March I was in Las Vegas for work trips. So I'd put money into that account. I like to generally have about $1,000 in there at all times. I don't currently have that much in there right now, honestly. So I need to start building that up. Next is auto maintenance. I put in the $20 a month, which I am changing for Q2. So if you see my May budget with me, that it might be posted before this or it might be posted after this. But I do kind of change up my sinking funds and savings going forward. For May, let's see, car registration, I put in the $280 for that, which I actually have to pay by May 14th. So that'll go back down to zero, and then I'll start adding into it on a more regular basis. A whole new world is my travel sinking fund. So I do have a goal to have $4,000 in there, which actually I think I need to change. I'm going to change the goal on this while we're here to $6,000 because I do have a vacation coming up in August, and it's an international trip. The person I'm going with is saving up $6,000 for it, so I figure I should do the same. And so that's my goal. I don't think we will spend anywhere near that amount. I'm hoping not to anyways, because it just seems like a lot to me. But since that's what she's going to save, I'm going to match it. And that way, I'd rather have the money and not need it rather than end up being there, needing the money and not having it available. And then that way, if I don't spend it, it can just roll over to any other trips. So far in Q1, put in 100 in January, 50 in February, and 153 in March. CIA, this is for an exam I have to take to be certified. It's related to my work, and I've got the money set aside here. I've had it here for probably close to a year at this point. I just have not had the chance to study for my last exam and to register for the exam. So that is there. I should be taking it this summer though. I have one exam left, and so I just need to take it and get it done with. So that's there, 100% to goal. That's fine. My FSA, this one's a little wonky because it's an FSA, so it's not an HSA. With an FSA, you do have to use it every year, or you lose what's in there. You can roll over a certain amount based on IRS guidelines, which I think is $650 this year. But anything over that, if you don't use it by the end of the year, you lose it. And so even though I have here listed as a goal of $750, that's not really, not really accurate, because I don't put $750 in every year, and I don't want to end the year with that much or have that much in there because I don't want to lose it. And so it's something that I just constantly use for, any medical expenses. It can be things like co-pays, but it can also be any like over-the-counter medicine, or I think also even I saw on there like sunscreen, just like anything that could be like health medical. You can use from this. Auto insurance. The goal overall, I think I had it as 1,000 because at the beginning of the year I had different insurance, and the annual amount was like $1,300 or something like that. I don't even remember now. But I did switch insurance companies, and now it is every 6 months I pay, and my last payment was $440. That was in January. So I'm thinking my next one will maybe go up a little bit, hopefully not too much, but I have saved $500 for that. So I don't know if this $1,000 goal makes sense anymore, but I think I'm going to leave it there for now. I'd rather build it up and have it and not need it. So we'll see. The last one on here is down payment. I have not started saving for a down payment. I have a goal of $90,000, which actually realistically is probably $100,000, which is a lot for a down payment. And I do realize that. I'm originally from the Midwest, where you could probably get a house for, close to $100,000. But I now live in a high cost of living area. And I live in Southern California, where homes, the average, I think, home price is over $800,000, might even be $1 million at this point. And so to have a decent sized down payment, you need about $100,000. So I'm thinking, because that's what, if it was a $1 million house, that would be 10%. If it's a $750,000 house, that would be about 15%, or I guess like 13%. Yeah. It's a lot. And I know it's going to take me a long time to get to that amount. So I've put it on here, but I have not started saving anything to it. I do want to start this year, and I do have it up here as one of my goals to start savings towards my down payment. But right now I just have not started. But it's there. So savings progress based on my goals, all these goal amounts listed here, I'm only 6.6% to goal, and that includes that down payment. Savings balance by account. Here is the biggest one, which is my emergency fund. It's just shy of $5,000. I need to just put the extra, I think it's like $76 in there to make it an even $5,000. And then I do have a goal also to increase it up to $15,000 by the end of the year. But so far I haven't put anything in this year, so it's just kind of sitting steady at $49.24, but it is my largest savings account. All these other ones are kind of low. They're all just under $1,000. Savings per month, March again was the highest, which makes sense because if we remember on the income tab, March was the highest income month, and so it makes sense that March is also the highest savings month. So yeah, okay. So we'll go back to the dashboard and go straight into investments. I had budgeted to invest about $8,400 overall. I invested $8,400. So pretty much right on target, just a small variance overall of about $50. And so that's awesome. January, I did invest $300 more than I had expected. February, I was under in my investments. And again, that goes back to I spent a lot in February in my variable expenses. And so I didn't have as much money available to invest. And then March, I was right on target. And so I think, so most of this is obviously my 401k, but then it is also my 2023 Roth IRA. So that was a big goal for Q1 and into April actually, was to max out my 2023 Roth IRA, which was the $6,500 maximum for 2023. And so that's where a lot of this money went. Going into the year, I had only put in $500 into my Roth for 2023. So between January 1st and April 15th, I had to put in $6,000. And so that's the majority of this, because it's $8,400. So that with my 401k. And again, March is the highest. Again, that makes sense because it was the highest income month. If we go back over here, the income versus spend versus save, they all peak right in March. Save, invest, you can see it went down a little bit here in February, and that's again because that spend was high, so it's a wider variance between those two. Otherwise, it's pretty close, I would say, all the other months between the spending and savings and investing. So also I have an investments dashboard where I have it more broken out by my account and where everything went. So yeah, you can see here my Roth IRA in Q1, I deposited $4,440 in Q1 into the Roth, and then my traditional 401k, I deposited from my paycheck $4,000. What's this? Oh, and $10 to my brokerage account at M1 Finance, which those are ETFs, which are exchange traded funds. It's only $10 there, so not a lot, but that is okay. That's pretty much it. Not much really to look at on this one, just because I haven't done a ton of investing, and that's mainly because I do still have debt. It's pretty low at this point, but I do still have that, and I do have other goals I want to accomplish. So my main focus was getting that Roth IRA fully funded, and then obviously I do my 401k, but that's pretty much it as of now. Once in a while I'll throw a little bit into stocks, which is why there's about $3,800 in there. It's actually more than that because obviously the stock market has gone up, but I haven't contributed anything. But that is what was in there at the beginning of the year, and I just haven't added anything. So that is it. January, February, and March, a total of $8,451 was deposited into investments. So then going back, let's see, we'll go down here to debt summary. Okay, so debt, the budgeted amount is $126.53 because that is my minimum payment on my student loans every month, and that is what I paid. Because again, if you've seen any of my monthly budgets, I was focusing on doing the Roth IRA, and because these student loans have very low interest rates, and at this point it's a small balance, I have kind of put paying off debt on the back burner, I guess you could say, while I was working on finishing the Roth IRA and some other things. These were right on target because they are auto drafted from my account for the minimum payment, and so that's $126.53. And let's see, going into the debt tracker actually. So this is where I track my debt overall. So beginning of the year of 2024, I had $7,962 left in debt. I'm currently down as of end of March, so end of Q1, 7,657, and so that's a difference of 306, or almost 4% paid off this year. I do plan on paying this off. I've kind of gone back and forth. I'm not sure if I'm going to pay them all off completely this year, because two of them, so I have 3 student loans, which I'll go down here. I have these 3 student loans. So Fed Loan 7 has an interest rate of, I think it's 6.3%. And so that one's, I mean, it's not a low interest rate, but it's not super high. And the balance now is only $2,600. So I do plan on paying this one off, but these other 2, Fed Loan 10 and Fed Loan 11, the interest rate is 1.8% or 1.9%. And they have small balances. So Fed Loan 10, the balance right now is $2,128, and Fed Loan 11, the balance is $2,837. And so with the interest rate being less than 2%, I'm not sure if I'm going to completely pay it off this year, or if I'm going to instead keep paying the minimums and maybe pay a little bit more, because I think the minimums on each of them is like $25. Maybe pay like $100 a month until it's paid off. But I feel like rather than just paying them off completely, I could put that money in my high yield savings account and make double. Because on my high yield savings account right now, I think they're offering 4.4%. And so that's more than double the 1.8 that I'm being charged. And it's on auto pay, so it's not something that I like have to think about. And I don't know. I go back and forth because I do really want to be debt free, but in terms of financial, I don't know, like financially, I don't know if it makes sense to pay them off when I could be earning interest on that money or using it for other things. So yeah, I don't know. TBD, I guess. So let me know what you guys think. I know there are some people in the finance community who say just pay it all off, but there are some others who say, you know, pay off your high interest debt, but you can kind of let the low interest debt wait until after you've done a few other things. So that's where I'm kind of, I don't know, undetermined of what I'm going to do. I go back and forth pretty much on a daily basis of what I'm going to do with those. These 2, it's only about $5,000. So if I did $100 a month, they'd still be paid off in probably a couple years, 2 years maybe, 2026, 2027, somewhere in there. Or I could just pay it all off and be done with it. I don't know. But I will pay off Fed Loan 7 just because it is the higher interest rate and get it out of the way. It's, you know, $2,690. So it's not a ton of money. And I think this loan, when I first started paying this loan off, it was, I want to say this one was like $14,000 or $16,000 for this loan. So now it's down to $2,600. But yeah, I don't know. Let me know what you guys think and what you would do. Would you just pay it all off and be done with it? Or would you let the one with the lower interest rate kind of sit there and just, you know, pay it off a little bit at a time until it's gone? Let me know. So that's it for the debt. It's just slowly going down month over month. And again, it's all student loans because that's the only debt that I have left. If you saw my debt confession video, when I first started paying off debt, I had about $167 or $147,000, somewhere in there. And so to only have this like $7,600 left, to me feels like it's so small at this point because I started at such a high number and that's kind of why I'm not super concerned with paying these last 2 smaller ones off because I've come so far already, but then also it's like I've come so far and I kind of just want to be done with it. So I don't know. I go back and forth. I just really don't know. But anyways, that's it for the debt tracker. So we'll go back to the annual dashboard. Top 12 spending categories. Highest is rent. That's, no different for me. That's just how it's going to be. This is probably including April, honestly. My rent is $23.74 every month for a 1-bedroom apartment. So that's just going to be the highest spend for me always. The other things on here, make sense. Travel, work trips, stationery. All these things kind of make sense. No surprises there. Okay, and then, so then the bottom here is the quarterly review. So quarter one, income was $22,000, bills $9,383, expenses $1,900, savings and sinking funds was about $1,700, investments was $8,400, and debt was about almost $400. But going into the net worth, this is what I really like to look at, is the net worth. So I have Q1 here, kind of summarize assets. So in case you don't know how to calculate your net worth, it is your assets minus your liabilities, and that equals your net worth. And so I have a net worth tracker. So I have it here to summarize it, but I really like looking at the tracker because it just has more details. So I'm going to go here and look at it here. So starting out here, my goal for 2024 is to reach a net worth of $200,000. As of the end of Q1, my current net worth is $150,000, which is a new milestone for me. So on my long-term net worth tracker, go over here, I have a milestone tracker where I track each milestone that I reach for my net worth. And so let's add in here, March 2024, which means it took me 13 months from reaching $100,000 to get to $150,000, which is kind of interesting. It looks like it's kind of always seems to be around that much. At least since I've gone positive. Because it was 14 months. Then it dropped down to 9 months, which was nice. But then it's been 13. And you can see here back in December 2020 or December 2017, I was negative 100,000. I was negative even more when I first started budgeting, which was back in March of 2017. I think I was negative like 149, 150, somewhere in there. I just don't have that on this file, but I have it saved somewhere else. But it's interesting. So it seems to average around 13 months, 13, 14. So we'll see what it takes to get to 200,000. If it keeps with this trend of 13 months, that means I will not make 200,000 this year, like my goal says, but that is a stretch goal. I'll go to my goal tracker and we can look at what my original goal was. The $200,000 was a stretch goal. And so if we go back here, I'm currently 75% to that goal of 200,000. So you can see here it's going up every month, which is nice, and liabilities are going down. It's this little blue line, you can barely see it. And then let's look here. So assets. The biggest section in my assets is my retirement accounts. So as of the end of March, I had $126,000 in retirement accounts. Most of it is in my traditional 401k with $82,000, traditional IRAs at just under $12,000, Roth IRA is about $17,000, and Roth 401k is just under $15,000. And you can see all of these accounts went up month over month so far anyways, and that's because the market has been doing good. Plus I've been contributing to my Roth IRA and my traditional 401k. I have not contributed to my traditional IRA or my Roth 401k this year, but they have increased because of the market. And so that is nice to see. Yeah, so it's gone up quite a bit so far, so that's good. I think in April it's gone down recently, so it might go down as of the end of April, but we'll see once April is over. Taxable accounts. So the first one is Robinhood. Like I said, I have stocks in Robinhood. That has gone up every month so far. 39. I was thinking it was more than 39, but okay. So I guess it's 39 in my Robinhood. I don't have a lot of stocks. It's just a few different stocks. I think my biggest number of shares is Disney. I also have Tesla. I think I have like one share of Amazon stock, but yeah, not a lot of stock in there, just a few. Next is my M1 brokerage account, $264.75. So again, not a lot there, but it's gone up. And if you remember back to the investments tab, I only contributed $10 back in January. So it's gone up, I don't know, what, like $20 for the quarter. So not too much, but considering there's not a lot in there, that's fine. Cryptocurrency actually went up a lot in March. So I don't have my February number, but end of January was $191. End of March, it was $321. I think it's gone back down, but for some reason, I think it was Bitcoin went up considerably in March. But I don't really pay attention to cryptocurrency. It's just there. I think it's kind of fun, but I don't really put a lot of like thought or consideration into it, I guess. It's money that I have there where if I were to lose it, that's fine. I'm not too concerned about it. My cash and cash equivalents, I do not include what is in my checking accounts that I spend as part of my net worth, because usually that is all allocated to certain expenses and bills. And so I don't include that in my net worth, so that's why these lines are blank. But I do include what's in my starter emergency fund, and then I have the rest of my emergency fund under sinking funds. Then I also include my other sinking funds and the cash value of my FSA. So this has gone up. And this, I mean, it's not always going to go up, because if I spend from my sinking funds, it's obviously going to go down. But so far for Q1, it went up about $800. Real estate, I do not own any. Other assets, I have a vehicle. It's completely paid off. And so I do include the value here. This was a value from Kelley Blue Book. And this was based on, I think it was private sale, and it was the low point. Because if you look in Kelley Blue Book, they will give you a range of what your car is worth. And so I took the low point and used that. I haven't updated it since, I think it was December the last time I updated it. So at some point, probably in Q2, I will update it, and I'm sure it'll go down, but that is fine. So then the other part of your net worth equation is the liabilities. And we kind of already went over these in the debt tab, so I'm not going to go over them again. But it's just those 3 student loans that make up my liabilities. And so, again, you can see the net worth just going up month over month. I'm hoping to get up here to 200,000 by the end of the year, but we will see what happens. If it, like I said, if it's based on that same trend of 13 months, it's not going to happen this year, but we will see. It all depends on the market, honestly, because so much of my net worth is in the market through my retirement accounts. My net worth is heavily dependent on how the market reacts. So that is it for that one. And so then the only other thing I wanted to look at was the goal tracker. So on here I have 5 different financial goals that I'm tracking. And so let's go through this. The first one here is to increase my net worth by $50,000. And so for this goal, it would make my ending net worth for the end of the year $185,000. And so I've tracked down here how much it has increased each month, which you can see in March, it actually increased quite a bit, which was awesome. And so 38% of the way to goal there, or an increase of $19,000 for the year. And again, the 200K net worth is my stretch goal. And so my starting balance of my net worth was $135 going into the beginning of the year. It has increased that $19,000. So the remaining amount that I need to increase my net worth to make this stretch goal is $45,795. So overall, I'm 77% of the way to the 200K net worth. I've got $45,000 left to go for the year. Max out 2024 Roth IRA. I have not started this yet. $15,000 emergency fund. I've also not started that. I started the year with just under $5,000, so $49.24, which put me 32.83% of the way there. The remaining $10,076 I'm hoping to add in throughout the year and hopefully finish that this year. Finish my 2023 Roth IRA. So this is the big goal I was working on in Q1, because you have until April 15th to finish your Roth IRA for the previous year. And so the goal was $6,500 because that was the maximum amount for 2023. I started 2024 with $500. Through Q1, I put in $4,440, which left $1,560 to go. So 76% of the way there as of the end of Q1. And so that $1,560 to meet this goal has to be deposited by April 15th. And if you've seen any of my other videos, you will see that I did make that goal in April. I'm filming this April 20, I think it's the 21st day when I'm filming this, but I did end up finishing this goal right before April 15th, so right before tax day. So this goal is finished, but as of March, it was not. It was 76% of the way there. I do have to go in at the end of April, and I will fill this in, and it will be 100% complete. Okay, so then I think that's really it. We'll go back to the annual dashboard. I do like this little chart of where did my money go, just to see kind of big picture where all my funds are going. The biggest section here is the purple, which is my bills, which again makes sense. That is my rent, all the, fixed bills that you have to pay. But the next one is this yellow, which is the next largest, which is investments, which is really good to see. And again, that is including my 401k and my Roth IRA. So that's good. Expenses is a pink, so not too bad. And savings and sinking funds in green and debt in orange. So I think that's pretty much it on here. Yeah. That's pretty much it. So let me know down below how your Q1 went and how things are looking for Q2. I know Q2 just started, but how's everything going? Let me know. And I hope you liked the video. Please like and subscribe, and I'll see you in the next one. Bye.